What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for DJT, Trump Media and Technology Group. I'll first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So let's take a look at DJT on the daily chart. You can see that it's been inside of a big range since basically January of last year. So it's basically 1 year of a very volatile trading range because we see these massive swings in the up and down direction. So it's not trending in any particular direction. It's just that the market takes control in a given time span from being bullish to being bearish. So you can see, for example, price was bearish here, and then it was bullish, and then bearish, and then bullish, and then bearish, and then bullish, and then bearish. Now it looks like it could be bullish again. So it switches back and forth. It's not trending in any particular direction. Like this would be a downtrend. Most of the time, it'll just continue to trend down. Now we're in a kind of a range. So price is finding resistance at that $55 level, and price is finding support at the 26.81 level. I don't know why with those two levels. I mean, there might be some reason, but it doesn't matter. But that's what the chart is telling me. It's telling me that when price gets up to the $55 level, some reason price sells off. Whenever it gets down to the $26 level, there's a good chance that buyers can buy it up and support that price. So that's the dominant technical pattern, a range between the 26 and the 55. Okay, so with that out of the way, we can get into like the more detailed stuff. So you see that when price hits one side of a range, it works its way to the opposite side. So since we hit the bottom, there's a good chance we can work our way to the top. However, you have to watch the price action, and you'll see the minute details stick out to you once I mention it. So for example, you can see that when price hit the bottom of the range, look how quickly it took off. It took off like a rocket. Same thing right here. It took off like a rocket. Now, what do you see right here? Is this taking off like a rocket? Not really. It's kind of weak. It's slowly going up versus before it would go up quicker. Even right over here, this took off like a rocket. So the bulls don't seem that strong as of right now. It's not the end of the world, but it looks like it could be at least maybe more consolidation, more indecision going on here than other times before, because the bulls were pretty certain down here that they should be buying. The bears were pretty certain down up here that they should be selling. Over here, it's not as strong. It's kind of going back and forth, but overall, it's still a upward bias. It's just not as bullish. So bullish is like it can be broken up in certain levels. You could be really bullish, super bullish, or just bullish. You know, it's not like, oh, I'm bullish, that means I'm super bullish. No, it's different levels to it. So this was super bullish, and now this is just, barely bullish. So it's different levels of being a bull and a bear. Anyway, so price is basically consolidating. It hit the lows of the. Let's go back up a little bit. You see that price hit the $55 level, found resistance. It made one large drop down, and then we had a bounce, and this was the beginning of the second leg down. So that's what the bears were targeting. You can see that this was the first attempt that failed. This was the second attempt that failed to reach that $20 level because the range support was holding. And then price was able to push through this trend line right here, which shows loss of momentum by the bears. So there was possibly a long trade right here. It was just this consolidation you would have to worry about. But basically, price made one leg right here. Second leg reached the target of about 36.61, and then we've been consolidating since then. So there's a micro range in play. So you can see how on the higher time frame or the bigger picture, we have this big yellow box, and you can see that we have a breakout here and a breakout here of this box. Now look what happens when you just go zoom in on the price action. You see the same structure. We have an orange box. Price broke out on the top and failed and came back inside the box. It even broke out on the bottom. This wick right here is breakout on the bottom. If you go on a lower time frame, let's say the 1 hour, you'll see that there's candles outside of the box. See how it's starting to get outside? We can even go smaller and you'll see it more clearer. See how this candle's outside the yellow box? So we have a breakout on the top that failed, breakout on the bottom that failed. So let's go back to the daily. Now zoom in. So what does this all mean? Basically, price is looking bullish. It hit the bottom side of the range. So I'm expecting it to hit the top, especially after the bears are struggling to reach their target. So it looks like we could be seeing higher prices in the near term. However, we could always jumpstart back to being bearish again, especially if we start breaking this orange box to the downside. So that's something to keep an eye on as well. We could probably come back and tag that $26 level, maybe see a double bottom and then a push up higher. But overall, it looks like, the bulls are trying to make another leg up. This is one large leg right here. And if we bring it down to the end of the correction, this is the second leg up targeting the $69 level, which is coincides with this level right over here. So everything kind of lines up. So overall, it's bullish, not as bullish as it can be, but it is making higher lows. Let's see what it does out of this orange box, expecting it to continue to move up higher. Take a look at the weekly chart, and you see that we have that indecision going on in the near term, but overall still looks pretty good to the upside. Maybe we can draw a trend line off of the swing lows, something like that. So it looks like we're still above this bullish trend line as well. So overall, it still looks pretty good to the upside. But like I said before, it's not as bullish as it can be, or maybe should be. So we could see that drop down towards the $26 level, and then maybe a push up higher. So either way, if we drop down, I'm expecting a push up higher, or we get a push up higher from where we are right now, towards that mid 50s and then maybe the high 60s. However, if you see aggressive selling take place and we see a break of the mid 20s, then that means it might fall down much lower. So something to keep an eye on. This would be a key level that can change the direction of the trend, the short-term trends. So it's something to keep an eye on for DJT. There is this bearish trend line right here. That's why price probably got rejected just now. So you see that when we have trend lines converging, you're going to have that indecision. So you see that why is it starting to consolidate at this point right here at $35 level? Well, it's because we have two trend lines intersecting. We have this bearish trend line, and then we have the bullish trend line. But as right now, I'd say it's favoring more for the bulls. So there's a good chance that that bearish trend line will be broken, and then we'll see a push up higher. So that's all I have for. But again, the market doesn't know. The market needs some more confidence. So when it's not sure, then it's not going to be taking a trade, because then you're just guessing. Guessing is gambling. So that's all I have for DJT on the daily and weekly charts. This is Vee Trades, and thank you for your time.